President Trump is shaking things up with tariffs, DEI, and the TCJA. But what does all that really mean? The impact these changes will have is more far-reaching than you might realize. This is Focused Economics, and here is our breakdown. But before we get to how all of this will affect you, let's answer the big question on everyone's mind. What is all this stuff? What are tariffs? Simply, tariffs are taxes on imported goods. However, there is some confusion on how they work and who pays them. Contrary to popular belief, it is not the manufacturer or the country of origin that pays, but rather the company or consumer that imports the product. If a 25% tariff is placed on Canadian steel, the government charges the company buying the steel an additional 25% tax. Typically, the company buying the steel then passes the cost along to their consumers by raising prices accordingly. The mindset behind tariffs is to discourage importing from certain places and to encourage buying more American-made products. In practice, the result tends to be more nuanced. What is DEI? DEI stands for Diversity, Equity, and Inclusion. The Independent defines it as policies that encourage the workplace representation and participation of people of different genders, races, ethnicities, religions, ages, sexual orientations, disabilities, and classes. The belief behind these policies is that diversity among the workforce leads to a more productive, cohesive, and successful team. McKinsey's Delivering Through Diversity report found that companies that demonstrate gender diversity on their executive teams were 21% more likely to see above-average profitability and longer-term value creation compared to their peers. However, there are those who dispute its effectiveness. What is TCJA? The Tax Cuts and Jobs Act is a pro-business, pro-growth piece of legislation that, among other things, gave businesses tax cuts intended to be used for job creation, higher wages, and operation expansion. Initial estimates were incredibly positive, projecting the creation of 215,000 new jobs. The largest overhaul of the tax code in decades, it cut the corporate tax from 35% to 21% and was initially set to expire in 2025. It impacted dozens of elements of the tax code, from standard deduction levels to estate taxes to net operating losses. This seems like a great thing on paper. But who actually benefited? The financial world can be hard to navigate sometimes. Staying up to date on all the big changes and understanding how they will affect you and the world around you is almost a full-time job. Fortunately, you can leave the headache to us when you subscribe to the channel. We'll keep you on the cutting edge of the financial world, not just with the news, but a breakdown of why it matters. So click or tap to like and subscribe today. Now back to business. Okay, but what about me? Tariffs. In an effort to prevent a trade war between America and her nearest neighbors, Mexico and Canada have entered negotiations with the administration, with Canada leading the charge towards avoiding a messy situation between the North American allies. Unfortunately, however, the Chinese tariffs are in full swing. The initial effects of the policies might not be felt by consumers for several weeks. Still, the fact is, the United States and China engage in a tremendous amount of trade. Experts say that consumers and businesses alike could feel the sting in their wallets on over $450 billion worth of goods. Per the BBC, the Tax Foundation estimates that the tariffs on China will add $172 to the tax burden per U.S. household. Historically, the intentions behind tariffs and their results are far from the same. DEI. DEI was presented as a way to blend diversification and merit-based hiring. In practice, that was not always the case. Many feel that DEI policies were used to ease consciences, to the detriment of success. The merit-based elements of the policies, it is argued, have been ignored. With it now being phased out, the outcome for small businesses could be hit or miss. With diversity requirements no longer the focus, the hope is that contracts and jobs will be awarded based on the efficacy of the candidate. Experts are split on this, however, as many point to how this also opens the door for more nepotistic and favor-based appointments. As with many of the policies discussed in this video, the intentions may appear noble, but the application remains to be determined. TCJA. According to Investopedia's report, the TCJA cut the corporate tax rate to benefit shareholders, who tend to be high earners. It only cuts individuals' taxes for a limited period. It scales back the AMT and estate tax and reduces the taxes levied on pass-through income. It does not close the carried interest loophole, which benefits professional investors. Once individual tax cuts expire after 2025, the TPC estimated that the majority of taxpayers, 53.4%, would face a tax increase. 69.7% of those in the middle quintile, 40th to 60th percentile, will pay more, compared to just 8% of the highest earning 0.1%. While the average American household definitely benefited slightly from the TCJA, the vast majority of the benefit did not trickle down to the workers and consumers as initially projected. The tax breaks were appreciated, but it did not usher in the era of American prosperity that was promised. Many experts have compared the minimal return on investment to the trickle-down economics plan from the Reagan era. While the means to improve the situation for consumers and workers was there, corporations instead chose to pocket the extra funds, handing them out only to the highest positions. The everyday worker experienced none of the benefits of the plan in their work life. Overall, the projections are not promising at best. However, the long-term effects of things like tariffs can be hard to predict sometimes. So while there is cause for concern, it's not necessarily time to sound the alarm bells. It is also good to remember that between now and the time these policies are officially implemented fully, a lot can change. They may not turn out to be as extreme as they appear today. But what do you think? Sound off in the comments and let us know what you think of these policies, and we'll see you in the next video.